Hi, I'm Lauren Taylor, Managing Director of Active Property Group. I'm here today to give you the quarterly update for our pool mortgage fund, PMAC Trust. For the June 2025 quarter, we delivered an 8% per annum return, or a 2% quarterly return. This has been a decrease on our previous quarters, especially the exceptional result we delivered in March 2025. The main reason for the lower result was the high levels of excess cash we were holding during the quarter. The reason for holding this excess cash was due to the pipeline of loans taking longer to settle than expected. In the lead up to the federal election in May, many of the loans in the pipeline stalled, which appears to have been a common trend for businesses around election time. And as such, we had a large amount of cash waiting to be deployed. Once the election was over, a number of these loans returned and some were settled prior to the end of the quarter. However, there was still excess in the cash in the bank, with other loans being repaid during this period also. Most of the excess cash was transferred into our investment account, where it was achieving a decent interest rate. However, the performance was not the same should it have been deployed in our loan portfolio. We've also seen 2 RBA rate cuts so far this year, which means that the rates that we are lending our funds out at has also been reduced. During the period of higher cash levels, we also employed a special rate offer for select borrowers with limited time interest rate reductions to get the excess funds lent out as quickly as possible. While our return for the June quarter is lower than previous quarters, we still remain highly competitive in the market, with very few funds offering the risk and return ratios that we provide. The focus for this quarter will be to deploy all the additional cash we are currently holding, which should lift the return on your investment, although this can't be guaranteed. We have just hired 2 new staff on the lending side of the business with the sole task of ramping up the number of loans we are settling and to get all additional funds lent out. We will also continue to work diligently to finalise repayment on those loans that are currently in recovery. As we've now entered a new financial year, we like to take a look back at how things went for the pool mortgage fund over the last 12 months. Over the year, PMAC Trust delivered a great return of 9.35%, and the fund grew to just over 42 million in funds under management. 64% of the growth of the fund was due to existing investors reinvesting in the fund, which is a testament to the trust that our investors place in us to deliver outstanding results. And interestingly, the average investment amount was $94,345, which was up 32.5% compared to the previous financial year. We've recently been able to accept some of the funds from the investors on the waiting list and will hopefully soon be opening up for all others on the list. As such, if you would like to invest any additional funds in the coming months, we recommend getting your application form in now. Thanks to all of our investors for your trust and support during the last financial year, and we look forward to working with you this year. If you have any questions about your investment, then please get in touch at investorrelations@activepropertygroup.com.au. Thanks, and see you next time.